Hello and welcome to Business 7. Late February, March, usually in Namibia, as with the rest of the world, is financial results season. That's when your listed companies either release their interim results or their annual results for the year ended December. And in tonight's show, we're going to take a look at one of the listed companies in Namibia, that is Capricorn Group, and they're in the studio with us to talk about their performance. As usual, we also bring you news from across Africa. Stay tuned.
Connection. It's in the human touch, the feeling of belonging. It inspires us and empowers us, creates clarity from complexity. It starts new conversations, unlocks the power of advice, and makes an impact on your life. At Alex Forbes, we pioneer insight to provide you with advice that connects your decisions of today to your impact tomorrow.
Capricorn Group, they are listed on the local index of the Namibian Stock Exchange, and one of their flagship brands, of course, Bank Windhoek. Now, they released their annual results for the year ended 31st December 2023, and the Chief Financial Officer, Johan Maass, now joins us in the studio to talk about the figures. A regular with us in the studio at or during financial results season, Johan Maass, the Chief Financial Officer of Capricorn Group. Welcome to the studio, Johan, and I do see you have quite a smile, so you're happy to be here.
Yes, thank you. It's good to be back, and obviously a good smile with a good set of results that we put out for the 6 months ended December 2023.
Indeed, solid performance from Capricorn Group. Before we start talking results, because results are determined to a large extent by the economic environment that we find ourselves in. In a nutshell, in which economic environment did you operate in your past half year?
So we are definitely still seeing that pick up post-COVID, post-2020. As we see loan book growth and some growth on the transaction side as well. However, with the higher interest rates, we do see some of our clients struggling to make payments. We need to make, we just need to think about, that we are currently 75 basis points above the pre-COVID levels. So especially those clients that took out loans during COVID, where the rates were quite smaller than they are now, we are seeing that there is a bit of struggling to pay back those loans currently.
Cool. Let's quickly take your highlights, the most important points of your financial results.
Yeah, so 18.5% growth in our profit.
That's amazing.
Yeah, but we do need to add the caveat that this was based on what was reported to the market last year. During the current financial year, we did have a restatement of our prior period numbers that came about with the introduction of IFRS 17, that mostly affects our insurance part of the business. So there was an additional profit that was added to the previous year, which now did take the year-on-year growth down to 7.5%, but still based on what was reported to the market last year, 18.5% growth to 827 million.
Very impressive. Other financial highlights that you reported?
Yeah, so from a capital perspective, I think our capital is quite healthy with 17.6% CAR that we currently have. And then on the dividend side, which our investors I think would like, 23% growth up to 48 cents per share that will be paying out next month.
One of the we often see that in the media, and I'm sure you hear that too. Once the financials come out and there's a healthy profit growth, etc., people immediately blame things like interest rates. Now we know that you did operate in a high interest rate environment. Can you sort of just put that into perspective for us?
Yeah, so interest rates, it is higher than what we do charge to the customer, but we do need to take into account that the rates that we pay also goes up with a similar amount. So we do benefit slightly in times when interest rate goes up from a margin perspective. However, that is offset obviously by higher impairment charges, like we're currently seeing, both at a Bank Windhoek level, at a Bank Gaborone level, as well as other players in the market currently.
Just quickly sidetrack you here, just for a quick opinion. In terms of interest rates, what do you expect for the rest of the year?
Yeah, so it's difficult to look into that crystal ball. We are expecting, at least for the rest of our financial year, which will end 30 June this year, that interest rates will still remain as is. And then we are forecasting between 25 and 75 basis points coming down within the next 12 months after that.
You touched on it earlier. If we can just maybe look at it in a bit more depth in terms of your loan book quality, impairments, etc. What is the situation compared to the same half year in 2022?
Yeah, so our impairments went up quite significantly. We had a 98 million increase over the impairments that we had in the previous financial year. However, this was circulated to a few small handful of clients that made up a big value of those loan book, of the non-performing loan book. A lot of them has actually been struggling since COVID, and we did try our best to help these clients, but I think the higher interest rates just didn't make it possible. Yes. So I think, still a lot of hard work to be done for the remainder of the financial year, especially on the impairment line. Obviously we don't want our clients defaulting. We're trying as best we can to help them also through this period. And we do believe that there will be a better second half of the financial year, especially on that line.
Well, a better half year for you means a better half year for the economy and people like us. So here's hoping. I ask this every time you come to the studio, but once again, put the whole issue of impairments in layman's terms for us.
Yeah, so impairments...
it doesn't mean you've written it off.
No. So it means that we actually hold impairments even on the day that you take out a loan, that day that you drive your new car off the lot. We already hold a small impairment charge on that loan, just for the possibility that it does go bad. And then obviously as you move through the cycle and you start missing payments, that's when it then we then start holding more and more impairments there. So so definitely not that it's gone. We are still working together with those clients. We're just obviously holding a much more prudent provision for impairment currently.
In terms of credit growth overall, we know that the numbers coming out of the bond, the overall numbers, are still rather subdued. What did it look like for Capricorn? Yeah,
so I think in Namibia we actually had a similar story than the market did, a smallish loan book growth. However, from our operations in Botswana, we did see a double-digit growth in loan book there. So that is where the large majority of our loan book growth actually came from currently.
And segment-wise, where did you see the biggest growth in your loan book? Was it mortgages? Where was it?
Yeah, so similar as in prior years. In Namibia, it was mainly vehicle loans that we actually saw going up, and then mostly on the commercial and term loans in Botswana.
Once again, a very healthy economic indicator if you see vehicle loans picking up, because that's sort of an indication that there's some appetite returning to the market.
Yes, yeah. So there is always two things for me that I like to see. It's when the vehicle sales are doing good, and when the restaurants are full, because that's exactly normally showing that people have got excess
disposable
money,
income,
disposable income that they can spend.
In terms of deposits, how did that side of the business fare?
Yeah, so our deposits growth I think, was in line with what we are expecting. We did see very high liquidity levels in the market for the last 12 months or so, and not even a large chunk of that did come to us. But we still had a very good deposit book growth, and we're definitely focusing a bit more on the current account and savings account, which are your cheaper forms of deposits as well. We did see a good growth there.
In terms of expenses, where was your biggest growth, and why?
Yeah, so expenses growth was 11.5% for the year, which is a bit more than inflation, but a large chunk of that, more than 3%, is actually made up of variable banking expenses. So these are when your transaction volumes goes up, you also incur extra expenses. For the remaining 8.5% was mainly focused around inflationary increases that we saw year on year. Increased license fees, especially when the rand and the NAD does weaken against the US dollar, and then we also had some vacancies to fill, especially after we froze some vacancies during COVID. So we have started ramping that up since 2022, and we're still seeing that coming through.
Capricorn is much more than Bank Windhoek and Bank Gaborone. Your other segments, how did they perform?
Yeah, so I think from a CAM perspective, did very well. They increased their market share to 34.6% as at December 2023, which I believe is the largest market share that they've held since 2009. So definitely a very good performance from them. From an Entrepo side, I think there's also some appetite that is returning to that market. So we saw good loan book growth, and I think it will be further spurred on with the promised 5% increase in the civil servants wage bill that we saw in the budget speech last week.
Capricorn also adding a lot of value to your stakeholders, and that's something that one doesn't always focus on when these financials come out. Can you elaborate a bit on that?
Yeah, so I think it is important to note that we are a corporate player inside the countries where we are. So Capricorn did create 2.4 billion in value over the first 6 months of our financial year, and I have the stats here. 560 million of that was paid to our employees, 550 million to the suppliers, and then 574 million to the government in forms of taxes. We also spent just shy of 20 million on CSR projects in the region, and then shareholders benefiting from 314 million in dividend payments. So that excludes the 48 cents per share that we'll be paying next month. And then obviously we can't pay out everything. We need to keep something in the business to then grow, which obviously also benefits your current and future shareholders. It was about 438 million that we kept inside the business.
Commendable figures indeed. A little bit of a forecast. What do you expect for your second half year, and what is your approach going to be?
Yeah, so I think the second half of the financial year we are bullish in terms of our performance. I think especially on the impairment side, there's going to be a lot of work managing the credit risk for the next 6 months, and I believe if we can do that right, we should be able to again deliver a solid return for the full 12 months when we do release it on and about middle of September.
We're looking forward to those figures, and we wish you and the Capricorn Group the best with your endeavours. Thank you very much, Johan Maass.
Thank you very much.
Every day, you make choices that make you legendary. Journey together with us on the path to securing your legacy as a member of the League of Legends. With the Select Platinum Bundle Fee Premium Bank offering, you will access tools that will enable you to thrive. If you earn 850,000 Namibian dollars per annum or more, you can apply for this offering today via bankwindhoek.com.na for only 447 Namibian dollars per month. Bank Windhoek, a member of Capricorn Group.
Before we move on, let's quickly take a look at developments in the business landscape across Africa during the past week. And as always, this insert is brought to you by Reuters.
Here's what's been making the business headlines in sub-Saharan Africa this week. Sales of rough diamonds at Botswana Diamond Company, equally owned by Botswana and Anglo-Americans De Beers, fell by just over a quarter in 2023, data released by Botswana's central bank has shown. That's as an economic slowdown hit demand for luxury items in the US and China, and as competition from lab-grown gems increased. Mozambican President Filipe Nyusi cannot be sued in Britain over allegations he accepted unlawful payments, London's Court of Appeal ruled on Thursday. That's as a part of Mozambique's litigation over the decade-long tuna bond scandal. Emirati-Lebanese shipbuilder Privinvest, which Mozambique accuses of paying bribes to officials and Credit Suisse bankers, had wanted to drag Nyusi into the $3.1 billion lawsuit. Privinvest says the payments were lawful. Impala Platinum could shut some loss-making South African mining operations, Chief Executive Nico Muller has said. Such decisions could be made within the next 6 months if metal prices deteriorate further and restructuring efforts fail to improve margins. Nigeria will outlaw street trading of foreign currency under new guidelines set out by the central bank. That's amid broader reforms to Nigeria's currency market, which has suffered chronic dollar shortages after foreign investors fled following a previous oil price collapse and introduction of capital controls in 2015. And finally, Ghana's state-run electricity supplier ECG briefly cut power supplies to the Parliament building on Thursday over a $1.8 million debt. An ECG spokesperson said that soon after, the legislature paid $1 million and promised to pay the rest next week. A Parliament spokesperson did not respond to a request for comment.
The logistical problems in South Africa is no new news. It's been ongoing, it is leading to major disruption, and fashion retailers in the country now have to think outside the box. Reuters has this story.
South African fashion retailers are ramping up local production, executives have said, as they try to mitigate the impact of congestion at ports that has caused massive delays in stock deliveries. State-owned logistics company Transnet has been grappling with backlogs at the port of Durban and congestion at Richards Bay. It said in November that was due to factors including underinvestment in equipment and maintenance. It has warned that procuring some of the new equipment could take as long as 12 to 18 months. South African fashion retailers rely heavily on imports, especially from Asia, though they have been moving production closer to home. TFG, owner of the Fashini clothing brand, has fared better than some of its competitors. That's after it expanded its local factories and bought new ones over the past 7 years. It said that, as a result, it had enough stock for the key December festive season. For the upcoming Southern Hemisphere autumn and winter months, the company said it was taking necessary action, such as ordering early and amending destination ports. Woolworths and Truworths are also ramping up local clothes production, using local suppliers and placing orders earlier, executives said. Woolworths CEO Roy Bagattini said the company was placing smaller orders more frequently to avoid having big shipments stuck at the harbour. It's also directing ships to ports with fewer backlogs, such as Walvis Bay in Namibia and then trucking products to Cape Town. On Wednesday, Woolworths reported a 7.5% fall in half-year headline earnings per share as a result of cash-strapped customers reining in spending, as well as South Africa's energy and logistics problems.
Let me quickly show you something. Don't worry. Next time, I check nice.
Thanks, but it's okay. FNB Insurance checks nicer.
At FNB Insurance, we provide cover for all your valuables, from your phone to your laptop to your car. FNB Insurance. You value it, we cover it. T's and C's apply.
That's it for Business 7 for this week. Thank you for joining us, and we'll see you again next week. We're playing out with a story by Reuters showing how important it is that business keeps coming up with new ideas and innovation to secure their market share and, of course, keep their market share. This story is about AB InBev's South African breweries. Until next week, keep well.
According to one of the advertising slogans for Corona beer, paradise is best served with lime. But in South Africa, that's posed a problem. They don't have enough of the citrus fruit. That's prompted brewer AB InBev's South African breweries to act. It's investing 19 million rand, or just under $1 million in a local lime farming project in South Africa's northern Limpopo province.
It's quickly become the biggest lime farm in South Africa.
Piet Smit is CEO of Komati, which runs the 150-acre farm.
I think the relationship with AB InBev was the biggest driver, not only because they funded the project, but also they're the major takers of the fruit. They have the first right to take this fruit and use them in their Corona beer.
Smit said that in the last financial year they budgeted to produce 300 metric tons of limes. Instead, they're going to end up with 700 metric tons. South African Breweries Corporate Affairs Vice President Zaleka Lisa said the challenge for them had been that only 10% of citrus farmland in South Africa was dedicated to limes. And that had forced the company to import.
Imported limes means you never know when they'll be available, limited availability, and secondly, it also drives cost.
SAB partnered in 2020 with the Moloteli community, which provided the land. Lisa said the lime project was an opportunity to invest in the community, while preserving the ritual of a wedge of lime in your bottle of beer.
Connection. It's in the human touch, the feeling of belonging. It inspires us and empowers us, creates clarity from complexity. It starts new conversations, unlocks the power of advice, and makes an impact on your life. At Alex Forbes, we pioneer insight to provide you with advice that connects your decisions of today to your impact tomorrow.